morning and welcome to the Spirit Technology Solutions FY21 presentation. Glad you can be with us. It's just become 11 a.m. In Melbourne and on the East Coast, so we'll begin. My name is Lukatsky. I'm the Managing Director of Spirit Technology Solutions. I'm joined by Paul Miller, who is the Chief Financial Officer. I'll work through the financial results, the strategy and the execution to date, and then Paul will take you through a deeper dive of the financial results and the integration that we've achieved over the last 12 months. On the first slide, which is on market already, really proud to present to you a year of achievement, both in terms of the financial metrics, which are represented in front of you, and also a transformational time for the business. The business only 12, 18 months ago was a small internet service provider. Today we present a fully integrated technology provider on a national basis with a national brand that's been launched in all markets up and down the East Coast. In terms of the financials, revenue is up close to 105 mil, up 200%. We're now seeing profitability come through the business as well. So as I think you've heard me say before, strategy on PowerPoint and easy. Execution in a complex market with margins flowing through is complex, and I think we've achieved that with the underlying EBITDA coming in at 11.5. We probably could have got it a bit higher, but we're investing also for the future in terms of integration. We've invested in all markets with our brand campaign, which is Do It with Spirit or Do IT with Spirit, and we've had some amazing lead flow coming through as part of that investment. Underlying. In terms of profitability, we've come in at 4.5 mil and statutory impact before tax at just shy of 1.4 mil. So what you're seeing is a business that's not just transformed in terms of who it is as an organisation, its product set, its culture, its brand, but you can see the economics flowing through the business, which is just as important as strategy, right? So really proud of what the team has achieved there. And everybody needs to remember the backdrop of what's been done here to achieve the results. You know, our management team is predominantly Melbourne-based, and that management team has been in lockdown for over 200 days. So the execution strategy has been down in a virtual environment. So really proud of what we've achieved here, and I think we've got a lot more to come. In terms of the underlying operating business is exactly in the spot that we want it to be. It's sitting in high growth markets, in products that people want, and the economics are now flowing through as well. In terms of the journey, sometimes it's not always easy to explain on a slide, but I'll certainly try to articulate what we've done, because there is a particular purpose to each acquisition, which I'll flow through to the Spirit operating model. So, where are we in the market? And this is a term that we've come up with, but I think it tries to succinctly explain what the opportunity is. And that is the integration of ICT or IT and telco products and services as Techo, which is a hybrid of that. What we've begun over the last 12 months is assemble the product range and the distribution to actually hit the economics and hit the results that have come through the top line and the bottom line. So if I look at some of the acquisitions to explain that, and then I'll talk to the operating model in a few slides. Trident, really vital business for us. It let us enter schools, hospitals and essential services, which have been paramount in the community in terms of the COVID environment. Voice print data, well, it looks like a brand, but the most important part of that asset has been we now have our own voice platform. So that means high margins. So at times we may sell a third-party product at a lower margin, but with voice print data, most of those margins, approximately 78%, can hit the bottom line because it's our product and our voice platform. Beachhead, Altitude IT is when we assembled a group of New South Wales-based managed service providers in one state and gave us about 120 engineers. Why is that important? Because apart from buying those at really good value, around 3 times multiple of EBIT, what they gave us is 120 engineers that we can't actually assemble in this market to be able to enter the mid-corporate market. Those skills in a really tight labour force in IT simply aren't available. So when I talk about people and profit, to get to what we want to do, we want to acquire profit, but we also need to acquire people at times because organically that's a really tough market right now. So I had only a conversation last night with a large corporate. Literally their IT team has walked out of that organisation because it's a tight market. So they're the kind of opportunities that we're seeing by being able to be an all-encompassing ICT and telco provider. Interlock, look, probably one of the best cybersecurity assets that was in the market. What that's given us is the ability to confidently walk into mid-corporate markets and have a really sophisticated conversation around their telco needs, their data needs, and then probably the most important topic of the day in terms of cybersecurity. So when we walk in, we're not just having a conversation around a commoditized product set. We're having a conversation around a sophisticated product set, which is relevant in the market. And that's why I'll show you some of the brands that we're winning and increasing our market share with because of that asset. Next gen, look, that gave us 5,000 SMB clients and a sales channel. We pretty much tripled our sales force overnight. So what you've got there, we don't just buy assets. We've acquired particular assets that give us a particular value proposition and competitive advantage. Part of that is skill set, part of that is intellectual property, and part of that is distribution or being able to sell more things, as simple as that. Near Horizon, you know, we're well on track to integrating all of those businesses into our CRM, what we call our standard operating environment, effectively the Spirit platform of where our customers live, our billing lives, because we want a good, clean asset, because we want to participate one way or the other in a consolidating market, right? So in terms of how that plays out, that'll work itself out in terms of the value of this asset that we're building right now. You know, near term or near horizon, as I've said here before, we've got multiple opportunities still in terms of M&A or bolting different companies on, but we're also really focused on using our capital well. And we discussed that with the market. So we've got potentially capital coming back. We've got multiple bidders for our consumer business as we've transferred to a B2B provider. And we've also got really good interest coming through on other infrastructure assets that we're happy to look at the right price. So capital coming in and also integrations accelerating. And we're roughly 10 to 13 companies in already on that acceleration. Mid-horizon, I can't tell you exactly what that looks like, but you have to look at some data points in terms of the amount of consolidation happening in IT and telco. So we're literally positioned to be able to participate in one shape or another in both those markets as a really unique asset, and an asset that is clean in terms of where its customers sit, where its margins sit, where its billing systems sit. So we're not a messy asset, we're a clean asset in our background or our back office as well. So what I wanted to kind of highlight, some of you would have seen this slide already, but I keep talking about it. We've done those acquisitions and do the integration to allow us to develop this type of go-to-market, right? So all of those blocks up the top are actually acquisitions apart from what we had. 17, 18 months ago, we only had the high-speed internet. That was it. That was the only product we had. Now we walk into an organisation with a brand, with a market presence in all capital cities and even regionally, and we can have a conversation with competitive advantage, not just a commoditized product set, which is data. So we can have a sophisticated conversation with the school around their migration from private cloud to public cloud. When we do that migration, and we've just done one for one of the world's largest mining companies, it is in a really sophisticated cybersecurity environment. Mobiles, we've aligned with Telstra on their wholesale product. We have our own voice product, that means increased margins. And when companies come to us and say they can't find the skills to manage all their IT, we have the skills who can help those organisations get through these difficult times, either on cyber or managed services across the lot. And that's the opportunity. In terms of the structural change going in the market, and I've said this before, you know, 12, 18 months ago, I had to explain that ICT and telco were merging. And once again, I've heard you've said this before, if you don't believe me that the two industries are merging, you're currently not on the same Zoom call I am, because here we are, right? Some of us are doing it from home. Some of it are doing it in the cloud. Some of us are doing it from the office. So the two industries in terms of the data link that's feeding this call, and also the ICT that we sell, which is on this laptop, the cyber, the managed services, all here. Here we are in terms of that structural change. It's right in front of us. In terms of our transition, obviously I've touched upon the divestment of the consumer business, but what you can see here is an organisation moving from being a small ISP to somebody who is entering both the SMB and mid-markets really aggressively. So I'll just call out that SMB 10% is only 3 months of the next gen business. So that will obviously grow as we see the full year coming through. But you can see that mid-market coming through. Why is that mid-market important? Because we can sell them more than one product. So if we sold someone just internet 12, 18 months ago, that's fine. And that's what the pure ISPs are doing. We're selling them 2 or 3 of those business models of our product models as well. That's why that mid-market. Why is that important? The economics are better, the customers are bigger, the contract lengths are larger, and it's really hard for them then to leave us because the skills are not in the market as well. And then we can then price that up or adjust our pricing upwards once we have that customer. So we can add value, right, to that entire experience. In terms of the next two slides are really important. I've had feedback in terms of investors understanding the different quarters, so I'll try to address that in terms of the lumpiness. What we're seeing is a business go from a really linear quarter to a business that requires large-scale professional services up front for mid-market and corporate to actually install the products and services that we've got. For SMB, we typically sell a voice product and a data product that is really off the shelf. You come in, you want a data set and voice product. But mid-market corporate, it is a very bespoke environment. So we charge that at a professional service level. That can take up to 3 to 4 months. Right from there, one of the couple of large contracts that we've written has been 3 and 5 year terms. So you can now see if you sold them 3 or 4 products and then you sign them up for 5 years, how valuable, right, the portfolio of assets is in the company right now, right? And maybe the market hasn't woken up to that yet, but clever investors on annuity revenue streams that are locked in will eventually wake up and it'll work itself out. The market will work out the value in the portfolio over a period of time. So where I'm going with this is, and Paul will take the next slide, is don't look at the business on a quarterly basis, right? There's no tricks being played here. There is a really strong portfolio, but there's lumpiness and different seasonality coming through as the business migrates to being a pure ISP to a really sophisticated, intelligent technology company in the market. Paul, do you want to, I'll hand over to you just to emphasise the point and talk about the revenue cycles and the seasonality coming through the portfolio.
Yeah, thank you, Sol. And it's a real pleasure joining today. As Sol outlined in the go-to-market slide, Spirit now has a very diverse product offering and our customer base spans from the SME market through to the enterprise market. So in many cases, those solutions, we provide a combination of recurring contractual revenue and one-off based project revenue. So those market streams have different sales cycles, and the table that's in front of you aims to illustrate those cycles. So as you move across the markets, the complexity of the deliverables changes, and so does the delivery timeframes. As Sol indicated, Spirit is aiming to expand its mid-market and enterprise reach, but that expansion obviously involves a longer deal life cycle and also a longer time investment. The other highlight I think that's really important is the revenue streams are not equally distributed. So our essential services business, for instance, does a high degree of infrastructure refreshes focused in the financial quarter 2, which tailors off in financial quarter 3. So Spirit's revenue, as Sol indicated, does display seasonality. However, importantly, it's also increasingly reflecting product and deal size diversification, which is very important. Next slide, please, Sol. Sol, do you want to jump to the next slide?
There you go.
There you go, thank you. All right, so look, before I jump into a little bit more detail on the financial results, I think it's really worth reflecting that the financial outcomes were achieved against the backdrop of a very heavy integration and migration effort in FY21. As Sol just said and often states, this work is critical to creating a long-term sustainable asset and hence creating long-term shareholder value. So integrating can be a distraction by its nature. However, I trust the financial results indicate that Spirit achieved integration success alongside maintaining financial return outcomes in FY21. So Spirit now has a system foundation in place, which the graph illustrates, to leverage growth as we scale further into FY22 and FY23. Of the 13 most recent acquisitions undertaken, all 13 have been integrated from a financial ERP perspective, and 10 of the 13 from a whole of system perspective. So this means we now have a single customer journey experience from order to cash. We also have a very clear view of our customers' product sets and, more importantly, the gaps we can seek to leverage and fill within those product sets for our customers. Sol, do you want to just go to the next slide? Thank you. So, I'm really pleased to provide an overview of the FY21 financial results that Sol has touched on. As Sol has already outlined, Spirit's revenue has grown to reach 104.5 million, which is up 20% from FY20. And this growth is a combination of organic and acquisition growth. And it is great to see the business units are increasingly combining to deliver custom solutions with multiple product sets. So as Sol said, instead of a customer having one, we're starting to get customers having, 2, 3, 4, and 5 different products that we can offer. Now, in assessing the business performance, we look at underlying returns by adding back the impacts of acquisition and integration costs, share-based payments, and other one-off items. So this helps remove costs that distort the true fundamental performance of the business. All right, so Spirit achieved a 209% increase in our underlying EBITDA, which adds back those costs that I discussed, to 11.5 million, and a significant increase in underlying net profit before tax to 4.5 million. So we're really proud of these results, and more importantly, on behalf of myself and Sol, we're very proud of our staff to achieve these outcomes. My final comment before handing back to Sol is that Q4 in FY21, being that April to June period, reflected the business strategy executing with really solid outcomes given the benefit of a relatively open economic market. Now, obviously, the current quarter, which we're in at the moment, has its challenges with the numerous state lockdowns that we've been experiencing, but Spirit is navigating through that like all companies and aiming to assist our customers get through that period. All right, thank you, and back to you, Sol.
Thanks, Paul. Well done. Can I might pause for a second just before I go to the final slide, and certainly encourage some dialogue. Please ask some questions in terms of Q&A. We'd love to have questions and have some live dialogue with investors and stakeholders on the call. So just finally, when you look at the numbers, probably the most important part is what's underneath the numbers, and really the organisation. Its most important parts are its team members, its customers. So I think you've probably just got a slice of Paul and I's only 2 team members. We're grateful for all our team members who, and a lot of them are actually locked down in Sydney and Melbourne to be able to achieve these results. We're also grateful to the customers that not only are we attracting to the organisation, retaining, winning, and also growing in terms of our customer base. So what you can now see is you've got a business that's playing in the SMB market with voice and data predominantly, and a bit of managed services, but you now have a portfolio across finance, entertainment, government, education, and healthcare, which is vital in terms of the challenges and I guess the volatility that you're seeing in the marketplace right now. If SMB is a little bit down, we're seeing really good growth through other parts of the business, and that volatility means that the portfolio of the different customers we have is also defensive during that volatility. In terms of to Paul's point before, all of these customers have either been retained or acquired through the last 2 years. The operating environment is tricky. It's volatile. I mean, I think if you don't think it is, you're probably living on another planet given some of the uncertainty. But if you look at through Q3, Q4, the operating business and the underlying business executed to strategy, in my mind, to 110%. Right? It was really strong on the SMB market. So our Spirit IT&T and the next gen business was very, very strong. And I know there's been a lot of questions around voice and data, but we grew the voice and data business in that 5 to 50 seats, probably at the highest level through Q4. And then also, and the corporate market, our cyber part of the business, probably has a pipeline of 3 to 4 months work already. Right? And then in that business, you've got a supply side channel. So what's the summary? The operating model is in really, really good shape. We've certainly put it into an area of demand. We have some supply side challenges in terms of people. And obviously, we've got some short-term challenges in terms of the SMB market. But couldn't be prouder of what we've achieved and where the business is in terms of the opportunities. I've talked to an update on the consumer divestment. That is going really, really well. We've got multiple bids coming through, and obviously we've got other interest in other assets that we may deem not core in terms of capital coming through the business. So all in all, really in good shape, albeit in certainly a volatile market across the East Coast is probably my summary. Paul, did you have anything to add?
No, I think so. That sums it up. The strategy is sound. The strategy was executed, as you said, to 110%. I fully agree with that in Q4, and we just navigate through the uncertainty over the next period.
Yep. I've just got a couple of questions which are really good to see. I'll just read the first name from Michael. With so many acquisitions in the short term, bringing key talent into the company, how are you developing culture and a great workplace, and move on to the great offer in a tight market? Yeah, I think people are the number one priority, and that's either the customers or the people within the organisation. How do we do it? Look, we a number of ways, and this environment, in my mind, is probably the most challenging leadership environment I've ever experienced, because we're managing it through a small camera on our computer. So only last Friday, I had 2 meetings cancelled, Michael, and I called 25 of our managers and key staff, because what's happened is you've lost a bit of the humanity in terms of leadership. So you're very transactional in meetings. So sometimes it's the answer to your question, Michael, is how do you build culture? Call people and ask them how they are, and don't talk about the commercial side. In terms of what we're doing, we are about to appoint a head of people and culture, which is a more senior role within our organisation on the leadership team. Give you an insight into the company and how we do things. We've got obviously a board. We've got an executive that meets every Tuesday to talk about a mixture of strategic issues and financial results. We also have a leadership team, which is the group reporting into the executive. And then every second Friday, we call a huddle across the entire company, right? So in that, we talk about our financial results. We have a deal of the week. We had a bit of fun last time with Friday the 13th with everybody dressed up. So we're trying to do everything we can within a complex environment to build culture, but ultimately it comes down to what leadership does. And that's around the values, hard work, honesty, over communicating, and sometimes just putting a phone call into people who are locked away in their homes trying to do the best job they can, with the challenges that come with homeschooling and everything else. Another question, emerging differentiators in the sector is customer experience, customer service, brand reputation. How are you competing in these areas, and how do you measure performance? Yeah, so we've just actually, timely question, we've just completed our first NPS survey. We just completed that in the market. I think we're 10 to 15 minutes into the first quarter. Just grab some more. Thank you. In terms of our customer service offering, I'd probably answer that you can't create a really good customer service experience if you don't have all your data or your customer data in one system. So what Paul talked to earlier about having all your CRM or your customer data in one system is critical. So when a customer calls and they've got 2 different products from 2 different acquisitions, that we're not looking at 3 different systems, right? So the first part is having the data in a centralized location, and 10 of those 13 acquisitions have all that data in one CRM, which is the Microsoft Dynamics platform, which is now integrated into our building systems. Certainly, we're 5, 10 minutes, 15 minutes into the first quarter of our customer journey. The ability to have the service level where we provide a network view or an ISP view and the IT view, I think we're still probably 6 months away from doing that really, really well. But I think the first principle of improving is being honest about where you are in your life cycle. And I think I've been pretty transparent that we're certainly not the end of it, we're at the start of it. And the integrations of the data give you a view of what we've done so far. So that's my answer there. Brad, thank you. Good result. Are you confident you'll meet the guidance of 20th of July on timing? On guidance, I think for everybody, look at it. I'm not walking away from guidance, but I'm also really conscious that the market is so volatile, right? I've only got 1 month of data. So the challenge is not about meeting guidance or not meeting guidance. It's really about a challenging of understanding the market in H1, right? Which is literally moving around on a daily basis. for us. So it's pretty hard to say either way for two reasons. One, we're not clear on that vaccination rates are ultimately driving guidance, which is because that ultimately drives opening up, right? So the other part that I'm not clear on is in terms of being exacting on guidance is also to do with what is the pent-up demand that is in the markets, that even if we may have an average month that we get back in H2, and that's just really difficult for me to say. So Brad, I can't be exact because I just don't have the view of when opening up, when different parts of the market will opening up. But the underlying business is in really, really good shape. So I can't, because I can't see the input variables, I can't be honest and precise about guidance in the community right now. And unfortunately, nor can our politicians, and that's the truth. How many staff, Wayne? Well, I think about 450 with a mixture of onshore and offshore staff. How many state government, local governments do you have in Queensland government per that slide? Wayne, I think the Queensland would be 2 or 3, but I don't know the exact number because it's across the portfolios as well. Final question from Simon. Are you seeing any supply chain issues for impact of any hardware in the current environment? Yeah, really good question. I tried to address this in May. So we do a lot of work for schools for their servers and their laptop programs that then allows us to sell our other products. We've actually forward ordered all of that hardware and hedged against it. So the ordering is done. The challenge is nobody's clear when the logistics or the supply chain lands those products onshore. So we've ordered, we've hedged, we've secured the orders for all of those hardware products for the schools early, and that's why you saw the total contract value go through up in Q3 and Q4, because we anticipated that for the school year in December going forward. The challenge right now is I don't know when the containers land in Australia, and nobody knows that exactly. So not too worried about the margin impact, more around when do they land, and then when does the sale become rev rec, and that depends on probably 50 container ships holding a number of servers and laptops from Asia.
Yeah, and also, so it's worth sort of reiterating, we were really proactive to ensure our customers had supply of hardware in that sort of that Q2 period. So it was, in June we did a very heavy procurement exercise along with our customers to ensure that we could satisfy their needs at a point in time, noting the supply chain issues.
Awesome. That's the final question I've got. I just want to thank everybody for joining us on the call today. We will wrap it up there. I also just want to call out any of our staff and team members who are on the call or at home, thinking of them, and obviously everybody in Victoria, New South Wales and any other parts of Australia who are in lockdown. It is a time to reach out and add some humanistic touch to it. So thinking of you, and we wish you well, and thank you for joining us today.
Thank you.